AI has been taking over almost all industries lately. It is everywhere, you've likely heard of it, and it's likely not going anywhere. So, in today's video, I did something fun and we asked an AI what would be a good trading strategy and things we should look out for when trading Cardano in a bear market. Now, as you may or may not know, most of crypto is really just down right now, especially in the past year. Crypto has been constantly dropping, and Cardano itself is at 25 cents. All right, pretty much a new all-time low for the past year. And it's been sitting here for a day or two now, down 16% in the past 7 days. And many people are thinking, what am I going to do if this drops any lower? And what should I be doing right now? As Cardano has been dropping and as Cardano has been in a bear market for quite some time now, since its all-time high back in September 2021 of $3. So I went ahead and I asked the AI, this is ChatGPT, by the way, write me a trading strategy for Cardano ADA that will work in a bear market. And although this answer isn't specific for Cardano, it reminds me and a lot of people out there some of the things we should keep in mind when we're either investing or just looking to trade and make profits on a cryptocurrency. First things first, trend following strategies. These are general. These are something everybody should use, especially if they are trading on a short-term basis. Me, myself, I'm just holding my Cardano. I invested for the long term and the fundamentals remain, so I remain. But including analyzing technical indicators such as price action, moving averages, and ostriches, things like that I don't always understand, but a lot of people utilize to determine where the price may go, definitely not guarantees, and possibly profit from it. Many people do use these successfully, but most people, I would say, who are getting new to these strategies like technical analysis, usually aren't making money out of the gates, and it takes a long time to see what works for them. Next up, in a bear market, something you can do, which is pretty basic, and everyone should probably be doing this if they're trading, is utilizing stop losses to minimize losses when the price of Cardano moves against your position. Now, you may not be someone who's really actively trading, but this is a trading strategy for the bear market. So a stop loss is going to automatically close your position when the price falls to a certain level, and this will protect your capital from further losses when the price begins to decline. Recently, it has been doing so a lot on Cardano. So say you had a stop loss at 30 cents, you sold all of it there, and then it dropped down to 25 cents, and now you could then buy back in and have more Cardano in your position if you're utilizing something like that for a stop loss. Obviously, you'd have had to kind of determine that the price of Cardano is going to dip below your position so you could buy back in, or so you wouldn't lose as much, but that is the general purpose of a stop loss. Next up, very basic, but limit orders. A reminder that you can use limit orders to take advantage of any potential buying opportunities in a bear market. So putting a limit order at a certain price, like 20 cents or 10 cents, where you think Cardano might go and just dip down there for a sec, but you might not be actively ready to pick it up at your desired price, then you can take advantage of this buying opportunity by having a set amount of money aside that's already ready to buy up at that price. The next up is probably one most people won't want to do, and that's hedge against themselves. Basically utilizing hedging strategies to reduce exposure to downside risk. So if everything is going negative in Cardano, what is something you can hedge against Cardano to offset losses in the market that is Cardano? This can help mitigate potential losses in the bear market, but be myself, I like to take my risk head on, and I don't really hedge my bets. I just go all in on Cardano. However, everybody's going to use their own strategies, and I may be a sucker or I may be a genius. We'll only find out with a little bit of time or a lot of time. Fifth, and the last one for this segment of the video, but we're going to get into some more interesting ideas, is using dollar cost averaging. I mentioned this in yesterday's video. This is probably the best way to just build a position in a bear market. Price goes down or price goes up. Either way, you're buying every week or you're buying every month or whatever average time basis you want to work on, and you're buying the same amount no matter the price. This helps reduce emotions, and you can also just right now get a great opportunity to accumulate a lot at a cheap price as you continue to dollar cost average throughout the bear market. So the AI responds in a much better way than any Google search would have given me. If I'll be honest, this Google search would have put me straight to a document through some journalist who gives their opinion and doesn't really provide any ways for us to think for ourselves. This, at least AI, although general, gives us ways to think for ourselves and utilize strategies that people use in general of trading to apply to our Cardano bear market strategy. Another thing that it mentions here in this response is short selling, basically selling an asset that you do not own with the expectation that the price will decline. And if the price does decline, you can then buy the asset back at a lower price and profit from the difference. Shorting Cardano is a meme. It's a lot of people out there who short Cardano, basically the expectation of the price going down and profit from it. And this is also a bear market strategy for those who want to use it. However, keep in mind, this is a risky strategy as there is no limit to potential losses if the price of the asset rises instead of falling. But in a bear market, price usually goes down, so it's probably a better time to short something than in a bull market. Not that I am going to be shorting it at all. It also mentions to stay informed. In a bear market, it is important to stay informed about market conditions and the factors that may be driving price movements. You can do that by following my YouTube channel or other crypto YouTube channels, or maybe general economics channels as well, because obviously the whole weight of the world does kind of lean on crypto and Bitcoin, and everything going on as a recession obviously has an impact on the crypto markets too, as it has an impact on the stock markets. But it may be a good idea to follow financial news or analysis or just developments in the Cardano ecosystem with channels like myself. I know for many people this video may have been a bit boring or just normal, but I know a lot of people out there don't even know about all of the different strategies. They don't even know about hedging their bets. They don't even know about short positions. And many people don't understand that there's a lot more opportunities out there in a bear market with certain strategies than there are others, or just completely different ones than there are in a bull market. Anyways, if you enjoyed the video today, I'll be posting another one likely today, tomorrow, and the next day. So stay tuned for that. Subscribe, stake with the Jack Stake Pool to earn passive ADA on your radar, and I'll see you guys then. Peace out.